starting our presentation, and thank you, Nazda, for possibility to have such a presentation. And we will start. Didzis Ādmīdiņš will follow the presentation about IPO and about our company.
Yeah, thank you, Kristaps. Thank you, Nazda, and thank you our existing and potential investors. We are happy that this day have arrived, and that's an honor to be the first company in the 20s from Latvia which are making IPO. We have been working very hard, and also thanks to our consultants, LHV Bank and Sutherland Defense, and also our DelfinGroup team. So I will tell you about our company, about our plans, and why IPO. Next slide. Yes, presentation is made jointly with LHV Bank and about our company. So we are on consumer finance business, that's for one side, and in retail business of brown and wood. And we have strong focus on ESG matters and responsible lending, and also on good corporate governance. So the company is established in 2009, and in terms of revenue, we are second largest non-bank lender in Latvia. We have more than 250 employees and more than 400,000 registered customers. And the main brands for our customers now is Banknote and Easy. So here you see the timeline of our development since 2009, when we opened our first contract nowadays. Yes, but here I want to point out 2010. At the very beginning, we had a very rapid growth. And, at the end of 2010, we already had more than 50 branches. 2014, when we start to list loans on Nasdaq Riga, and we are present in capital markets since then. 2016, when we joined Mintos P2P marketplace, and this year when we announced our plans about IPO and IPO itself. So here you see our main financials of revenue, profit before tax, and EBITDA. And here I want to point out profit before tax. And as you see, every single year, every single full year since 2010, and that was the first full year when we were working, we are profitable. And also, if you look at the revenue, we have managed to grow significantly, and we have increased our revenue every year, except 2016 when new legislation came, of course. But in that year, we changed our brand name and our strategy, and we started to focus more on installment loans, installment consumer loans with longer terms. And year later, 2017, we have significantly increased our profitability. So now I will tell you about what our both brands do. First of all, Banknote. And from Banknote clients, we get all our current service, and all our services are available through our wide branch network and also through online channels. And first of all, it's home loans, and home loan it's a loan against collateral, and all our branches and those loans are available through our branches, and all our branches look clean and nice. So it's nice to be in a branch, and they look like something between bank to branch and electronic shop, and so for clients it's a good experience to service in our shops. And if we talk about collaterals, the collaterals are mainly the gold, jewelry, electronic devices, and other valuable items. And our staff is very experienced to evaluate those items. And second, there are consumer loans, and consumer loans are available online and offline. And offline channels and offline presence is strongly supported also for consumer loans, and but nowadays many of those loans are issued online. And then there is a sale of pre-owned goods. So we are selling and buying pre-owned goods, and we have three main sources for those items, so for those goods. And first of all, they are from home loan segment. They are from when the client didn't fulfill the obligation to pay back loan. Then we sell this item, and then they are from source when we buy these items directly from our clients, and that's this growing segment for our company. And then there is a source when we buy these items from other third parties, for example, internet shops. And also we have our own workshop, and we are repairing those items. And by buying these items, sometimes repairing them, we are extending the life cycle of those items. And by doing that, we are part of circular economy. And about selling these items, so we are very good for evaluating these items, but we are also very good for selling these items because we have this wide branch network, and also we have our internet shop. And the fourth service is post loans or buy now pay later. And at the moment, we are focusing on offering this service via our branches. So we are financing the purchase which clients are doing in the branches. So Vizia is our second most well-known brand, and Vizia is online consumer lender from its services and installment loans. And Vizia is using market know-how and part of its infrastructure, and it's also a growing segment for our company. So we have a wide branch network. Altogether, we have 93 branches, more than 40 in Riga. And we have a branch in every town or city that is more than 5,000 inhabitants. And many of our clients are using these branches and only offline channels, but also many of our clients are using only online channels. And but also a significant part of our clients are using both, and we see very good synergy here. And in some smaller towns, we are the only place where clients could get financial service or buy electronic devices or other items which we are selling, for example, jewelry. And also we are continuing to develop our branch network, not in terms of quantity, but in terms of quality. So to summarize about our products and what our brands do, first of all, consumer loans. And consumer loans, their loans up to 5,000 euro in loan size and up to 16 months in loan term. And phone loans, there is no maximum loan amount, and it could be from several euro to several thousand euro, but the average loan size is a bit less than 70 euro. And if you look at our revenue stream, then composed the part which is the consumer loans is about 60% of our revenue stream. And about 1/4 of our revenue stream is from home loans, and about 16% is from retail pre-owned goods. But and that segment is linked to home loan segment of our company. And so what does it mean? We have a quite diversified revenue stream, and that's something good for investors which are thinking about risk mitigation and how to diversify. So we offer that. So to continue with our financials, here you can see how our credit portfolio have increased. For example, our consumer loan portfolio year-on-year basis have increased by 15%. And that's despite COVID-19 restrictions and COVID-19 difficulties. If you look at the home loan portfolio, then you see that it's quite stable, and but with some decrease during COVID-19, and that's explained due to that home loan is mainly issued, not mainly, but only issued via our branches, but still clients can fill application online. But it's more impacted during COVID-19. But as you see, the latest data we have, despite these difficulties, we have managed to also increase the credit portfolio for home loans. If you look at profit before tax, you see that we are profitable, and despite these COVID-19 restrictions, we have remained profitable and also increased our profitability last quarter. And if you look at revenue, and you see that also in terms of revenue, we have decreased our revenue indicator. So if we look at how we look in the market, how the industry looks, you see that for consumer loans, in 2018, our market share was less than 5%. And in 2020, our market share was almost 10%. So we are growing faster than the market. And our projections for consumer loans is that the market will grow itself at about pace 8% a year. But we will also increase our market share by successfully competing with our competitors, but also by introducing new products and product updates. If you look at the home loan sector, you see that credit portfolio is quite stable. This dropped in 2020, and that's explained due to COVID-19 restrictions, because these loans are issued offline. And but in this market, we are already leading company, and for this sector, our plans is to also increase market share by successfully competing with our competitors, and also by potentially making some acquisitions. For example, recently we bought a credit portfolio of one of our competitors, Moda Lombards, which was the fourth largest home loan operator in Latvia. And about the projections how this market will grow, our projections is that it will grow about around the pace of inflation. Okay, but to continue with our organizational structure, as a joint stock company, we have two-tiered organizational structure, which consists of management board and supervisory board. And next slide, please. Yes, and our supervisory board consists of 5 members. And yes, and good business have to be properly supervised. And across our supervisory board, we have very good competencies of banking, fintech, audit, retail, and other industries. And I want to point out that 3 of 5 supervisory board members are independent, and this supervisory board was established this year, and we had the international competition for that. So we trust that that also will positively impact the company and how investors evaluate us, and that's such a professional board is a good sign also for our potential investors. To continue about our dividend policy, yes, we have a good track record, good financial track record, and a good strategy and a business case, and its company is properly governed, but we also pay good dividends, and this year we announced our plans. We announced our dividend policy, which states that we will pay out dividends every quarter, up to 50% of quarterly profit, and additional annual dividends. And we trust that that also will be one of the drivers which will have positive impact, how investors evaluate us, and we trust that investors will enjoy such a substantial and good business. So this year we announced also our plans and for 2022 and 2024, and in terms of credit portfolio, our plans is to grow in the pace which we already have, and till 2024 being planned to achieve credit portfolio of 70 million euro, and also to grow in terms of profit before tax to 12.9 million euro, and continue to pay out dividends. And those assumptions is made based on that IPO is successful. So why IPO? First of all, our company is ready for that. We have very good track record. We have good financial track record. We have our properly set targets. And the company is very good governor. Second, in my opinion, markets are very ready at the moment. So, and the third is from one, it's like next step how to develop our company, and we want to do that. And we see that we are ready for that. But also, there is financial side, financial arguments, and by this IPO, we will increase equity, and that will allow us to decrease cost of financing, and that will have a positive impact to our profits. Next slide, please.
Okay, so I will take our Didzis and tell about the proceeds of the IPO process. So as already mentioned, that as we are going to raise nearly 13 million euros, so we are going to use this one just directly to strengthen our balance sheet and also have a direct impact on our profits, as we will repay the most expensive bonds, and also by participating in the capital markets, the company is well governed, and also with balance sheet structured very properly. We target to decrease our cost of financing, and so this will just from this IPO will have direct impact of 1.8 million euros on our profits, and further to be distributed as dividends and having a positive effect. And also about share offering, besides figures and the numbers you see, so we are going to raise 8,395,000 new shares. This means that no one of existing shareholders will exit, and the IPO process is targeted for the retail investors of Latvia, Lithuania, and Estonia, and subscription starts as of today, 10 o'clock, and will last till 11th of October. And yes, so they are everybody who is willing and who is thinking of investing with us, we are welcome you to also visit our webpage, DelfinGroup LV, is our corporate webpage, and there is also information about all the IPO process, about the prospectus, and also how and where to subscribe, and how to apply for the shares. And so by this, I would finalize the statement, and we are looking to see all of you participating as our shareholders in the near future. And as according to our dividends policy, we are going to hold shareholders meeting in December, and there is going to be a decision about the third quarter dividends of our company. And yes, so we are ready for the questions, and we will be glad and answer them.
Didzis and Kristap, thank you for the presentation. Let's proceed with questions received already before the webinar. But kind reminder to those who haven't yet submitted their questions, you are welcome to do it in the questions box in the settings panel zone. So the first question, what are your advantages and disadvantages, strengths and weaknesses compared to the commercial banking sector? It is no secret that large Latvian and Baltic commercial banks are also active in the consumer credit segment, issuing credit cards, overdrafts, etc. These banks have access to huge resources at lower rates and costs.
So I will cover this question. Yes, I think that there is not so much difference from the banking, as our products are already the same at the same level the banks are having for the consumer loans, and the difference for the financing. This is why we are here in the IPO. This is why we are strengthening our balance sheet. And this is how the strategy we see that we should decrease our cost of financing, and so we are going to further develop the company. And also, if we compare to the banks, which distinguishes us, is that we have a very broad branch network compared to the banks. We are closer to the customer, and in conjunction with the pawn shop business and also dealing in physical goods, this brings us closer to the client, and this is what we see our client has evaluated as our consumer product portfolio has grown so far.
Thank you. And next question. How would you rate the regulatory framework of Latvia and the neighboring countries and the consumer lending market, which is becoming increasingly restricted every year by governments regulating interest rates, demanding more strictly access customer solvency, income, taxes paid, etc.?
I will cover this question about the regulatory framework in Latvia. This market sector is quite regulated. We have strict regulation for pawn loans and also for consumer loans, and we are fully compliant with those regulations. And Consumer Rights Protection Center is licensing us, and we have 2 licenses, one for company DelfinGroup and one for Didzis Finance company. And so to summarize, yes, it's strictly regulated, and we see that the sector is very strictly regulated, but it's not over-regulated, and what does it mean? It does mean that the companies which are working in Latvia is quite professional, and the smaller ones, not so professional companies, are exiting the market, and that's also like a good balance where we are. So it's not over-regulated, and still there's many companies which are competing in this. And clients are benefiting for us, and also the market participants are benefiting for that.
Thank you. So the third question received before the webinar. Over the last 10 years, both Latvia and other European countries have experienced a boom in the quick loan and consumer loans. Could the life cycle of these products experience a decline?
Okay. I will cover also this about this boom in fast financing. First of all, I want to point that we are not on fast financing industry. Our products are installment loan, and we are focusing on longer term loans, for example, up to 5,000 euro and up to 16 months in long term. So yes, in Latvia, as I said, this sector is quite regulated, and that means that companies, classical trader loans are not working in Latvia, and actually because there is also this cap on the interest rate, and it's quite regulated. There is a license requirements, and that means that yes, there was some boom in this market and its end, but it's not the industry in which we have consumer finance. And our focus is that we are focusing on responsible lending, and we are fully compliant with regulation. We make full affordability check and full underwriting. We check state revenue service for every of our clients, and also we are checking credit bureau information for other client payments, and also late debt databases, and also we make our in-house scoring. So yes, there were times in the past that we are not in that industry, and we are focusing on responsible lending.
Thank you. The fourth question. Does DelfinGroup plan to attract reputable credit rating agencies such as Fitch, Moody's, Standard & Poor's, which would assign a rating to the financial instruments issued by DelfinGroup, bonds and shares?
Okay, I will cover this one. As we are focused on the cost of financing, when we are aware of the cost involved with having credit agencies, this costs us, and we are looking at total cost of financing, and those charges are pretty large ones. So I think that in future we will have to look in this one as our portfolio will grow, and also our financing, financing in terms of financing will also grow, and with larger bond issues, there will be was looking in the credit rating agencies.
Thank you. Next question about the pawn shop business. A significant part of DelfinGroup business consists of networks of pawn shops through Latvia and Riga. Are you planning to open pawn shops outside of Latvia? Do you see growth opportunities in the business segment outside of Latvia? Why are there fewer pawn shops per 1 million inhabitants in the old European countries than in Latvia?
Yes, I'll cover this one. Yes, we have 93 branches and more than 40 in Riga. And as I said, we are continuing to develop our branch network, not in terms of quantity, but in terms of quality. So we are looking where to put our branches and where it, the best place where it could be. But what we are doing in our branches, first of all, it's not like only pawn shop. It is we are offering both all our products via our branches, and they are consumer loans, and they are pawn loans, and sale of pre-owned goods, and this post loans. So it's not only the pawn loan. And for example, this segment of our company, sale of pre-owned goods, which is a growing segment for our company, and we see that we can add real value to the economy of Latvia and also to our company, and by offering this kind of service for our clients. And that means that, as I said also about our revenue stream, only about 25% of our company's revenue stream is linked to pawn loans, and about 16% is linked to sale of pre-owned goods, and about 60% of our revenue stream is from consumer loans. So we are well diversified via channels, online and offline channels, and also our revenue.
What are the biggest risks you see in upcoming 3 to 5 years on the market you operate?
Yes, about risks. Yes, as a company which are working in consumer finance business and in retail, we are facing the risks which have similar companies to us, and I would welcome you to read about our risks on our prospectus risk section, but there is nothing new what I want to add to this. And actually, to summarize, yes, and the risks which are facing our similar companies.
Thank you. Next question. You plan to increase portfolio quite considerably in near future. In recent years, however, respective growth rates have been quite modest compared to those periods. Has there been any demand that you have not succeeded to meet due to funding constraints? And how with new capital things are getting easier? Is the expected growth just function or less COVID plus gaining of market share?
Thank you. So, for our growth prospects, so we have grown so far, and the pace is there. So our targets are based on our current growth and how we have competed so far with the market, and I think we are doing all the right things, and also motivation is there to increase our product offerings, and also to make those offerings even better. And this is how we see. And for financing side, we see that currently there is current cost base, and issuing even new credits, the marginal cost of those of loans issuing is even less. So we have to manage actually the rates at which we are issuing those loans, and also managing credit risks, and also the cost of borrowing. So those are the elements, and we see the potential.
Thank you. How is it planned in the long term to sustain the current income flow?
Okay, if I understand correctly, let's see this question. Okay, about income flow, yes, as a company which is operating in consumer finance business, of course, our income comes from credit portfolio, and that's our aim, to increase credit portfolio, and we have already good track record by doing this. As I mentioned, in year-on-year basis, we have 50% increase in our credit portfolio, and that also allow us, that also increase our income, and that's also will increase our profit. And our target for 2024 is to almost double the credit portfolio to 70 million euros.
Thank you. Now let's proceed with questions received from the audience. So first question, what is the expected annual dividend yield for 2021 and 2022?
Okay, so I will answer this one. As indicated in our target slide, so we expect having dividends about 50% for the 2021 and 2022, and dividend yield-wise, so this is more of the market. How this will determine how the market will look at our company, how it will be perceived, and this is more of a market decision on what the yields they are expecting. So we can pretty much be sure about our targets and about our dividend payout, but yield is upon the market.
Thank you. Next question, how was the IPO price determined?
So I will cover this one. IPO price, so this is in close cooperation with LHV Bank. And we have looked at our peers, and also about the peers which are already currently in the stock market in the Baltics and also in East Europe. And of course, there is also the component of IPO discount in there. And so I think that this is a good proposition for potential shareholders.
Thank you. What is your expected post-money valuation?
So I think I covered already this one, and so if you have a price there, and if you have also the amount of shares available, so you can calculate this post-money valuation.
Thank you. The next question is regarding future plans. Are there any plans to expand Baltic markets?
Yes, we receive this question quite often, and to answer that, according to our strategy, at the moment we are focusing on Latvia, and we see that the very big potential here. And as I mentioned, our target is to significantly increase our credit portfolio, and we already have a good track record for that. And if you look at both segments in which we are working, consumer loans, then we see that in consumer loans, market itself will grow at about in our projections at around the pace of 8% a year. And that's explained due to that consumer lending portfolio for industry in Latvia is quite small if you compare it to GDP, for example. And if you look at the home loan segment, then there also our plan is to grow in terms of credit portfolio, but the pace will not be so fast. It will grow at the pace of about inflation. And but there, our plans is to make potentially some acquisitions that we already have done. But answering about Baltic markets, of course, we are monitoring what's going on there. But at the moment, yes, at the moment we are focusing on Latvia, and that's one good thing for investors, because it's a regulated market. It's quite stable, and we have already large market share, and we have shown that we can also increase this market share.
Thank you. How do you see yourself, as a dividend stock or as a growth stock?
So I will cover this question. So we think that we are both, and this proves that how we have grown so far, and also so far we have paid dividends. And I think that this is what we are going to continue, and this is based on our previous work and our performance.
Do you see any M&A possibilities?
Yes, thank you for this question. As I mentioned, we recently announced that we have bought a credit portfolio for mobile numbers, and in the phone loan segment we have done several acquisitions, not acquisitions of companies, but acquisitions of credit portfolio. And if there will be such possibilities, then we can evaluate that, but not anything other disclosed at the moment.
Yeah, so our targets, which are being presented, that doesn't include anything in particular, and so we will keep with our targets.
Thank you. If we assume that share price stays at IPO level, what would be dividend yield in 2021 and 2022?
So if we see that from our targets, then in 2022 we are planning to have 8 and above profit before taxes. So our target is to have at least 50% of dividends, and then so there will be our dividends, and also also combines the price itself and number of shares. So I won't here try to calculate by hand, by head, but I think it's pretty obvious.
Thank you. Next question. Based on 6 months 2020, 9.2 million euros interest rate income and average loan portfolio of 34 million euros, the portfolio yield is about 54%. How sustainable it is considering existing interest rates, cap, and any regulatory changes in the future?
So I think I will cover the number side, and also Didzis will cover about the regulatory changes if there will be in the future. And from our targets and our model, yes, we also have looked into the growing the portfolio and lowering the yield of those portfolios. And but in our targets is not just to receive this particular number in terms of portfolio, but of course it's most importantly to have a profit-wise. And so there are products which could be at more competitive rates, and also products which would remain at the rates the current rate.
Yes, and to add about regulatory framework, we are in a quite comfortable situation because the market is strictly regulated, but it's not over-regulated, and there is a space for business. And as you see, our track record is evidence for that. And at the moment, we don't see any new legislation changes at the horizon.
Thank you. The currently received last question. Are you going to repay both Nasdaq-listed bonds immediately after the IPO?
We are going to repay those bonds according to the prospectus, and they are particularly determined terms. And one of the bonds is maturing just close now, and also for the one bond there is possibility to execute a call option, and this is what we are planning.
Thank you. All questions are answered. Recording of the webinar will be available on the Nasdaq Baltic YouTube channel and also in company's announcements. Gentlemen, thank you for your presentation and for answers given. Participants, thank you for joining.
Thank you.